Hello guys, my name is Dima, and in today's video we're gonna talk about fair value gaps, also known as FVGs, and why are they so important in entering positions in the market. So actually this is one of my favorite instruments which I use daily in every position. Is consist this model with fair value gaps. So it's very important, guys. You can use them and you should know how to use them properly. So first of all, we need to understand that fair value gap is imbalance in the price, which means that the price is not balanced in this area. And it happens when the market moves aggressively in one direction, creating a three-candle pattern where the body of the middle candle leaves a gap between the first and third candle. So as we can see on this picture, there are three candles, yeah? And the middle candle between the first and the third one is not balanced with this wick. So what I mean is this wick ends here, this wick ends here, and this area between three candles in the middle one calls fair value gap. The same with the bearish one. This is the high of this wick, this is the low of this wick, and this area is without this wick, so this is called a bearish imbalance. Yeah, so why the imbalances is creating is because institutional activity, yeah, so some very strong transactions, strong displacements when the price moves aggressively to short or long direction, areas of inefficiency. That means that the areas are so strong that they push the price, so the imbalance appears, and high probability retracement zones. So this is four actually reasons how to validate the fair value gap and how the fair value gap appears on the market. So there are a lot fair value gaps on the graph, and we can see them daily. Actually, we have even the indicator that shows us the fair value gaps. It's called CO. I will leave it in the description of the video, but you can mark them by yourself because you don't need all of them. You need to understand what is the most reasonable fair value gap and which fair value gap will give you the reaction. And this is actually hard and you should prepare to this, but after you know how to do this, this will open the eyes to all the positions and all the entries that you take, and this will make your trading like much more better. So first of all, yeah, we can mark many FVGs on this area, but the price take the action and get the reaction from some sort of really important fair value gaps. This is some long logic video about how fair value gaps appears and why are they so important. Yeah, first of all, I will show you how the price tests fair value gap, yeah, and ignore this. So this is the second category of the fair value gaps. So first of all, regular fair value gap, yeah, this is the standard imbalance created by strong displacement. Good. So what is the standard imbalance make with the strong displacement? This is after the price hit these highs over here, yeah. So you can see this is the fractal, yeah, which stands alone on this side. And after the price, as you can see, the wick close under this point, but the wicks, yeah, the candles close under this point, but the wicks swept the liquidity, so it took this high. We get strong imbalance in this area. So what I mean is, this is our FVG, which was made after the price swept these highs over here. What does it mean is, after this liquidity swap, this short move was so strong that the imbalance appears. So this is the first and the main reason why the imbalance shows to us, because the price swept some sort of the liquidity and gave us some really strong sort of the reaction. So the second is IFVG. This is absolutely the same as fair value gap, but inversed. So what I mean by this is, when the first fair value gap appears here, the price makes some sort of manipulations, boom, boom, boom. And after that, we got the same imbalance, but different side. So this is imbalance number one. Yeah, this is imbalance number one from this candle to this one. And this is imbalance number two. So this area between these two imbalances will be called IFVG, which stands for inversion fair value gap. So inversion fair value gap is An inversion fair value gap happens when the regular fair value gap gets violated and the price break through it. It could be done by few imbalances. It could be done by one candle like here. Also, it could be done like, you know, like some candles break through some inversion fair value gap. So for example, this would be inversion fair value gap as long as the price is under this level. Yeah. So as you can see, the price stands under this level. Yeah. Above. So this small gap here is gonna be called inversion fair value gap. But as you can see, the price is not moving perfectly, so you won't see this type of fair value gaps usually. You could see different, and you should just understand that when this area has been breaking down or breaking up, this is inversion fair value gap. So this is quite easy. So how the IFVGs are important, and because they help us to identify market structure shifts. Yeah. So basically, inversion fair value gap brings us to a continuation of reversed trend. So this was downtrend, and this, after this inversion fair value gap, this is uptrend. Yeah. Before we hit some sort of liquidity here, maybe we hit this imbalance over here. Yeah. As you can see, we got some sort of manipulations, reactions, blah blah blah. So this is also the, you know, this is the key. When the price inversed this zone, we could go much more higher or much more lower. Like for example here, let's see here. Yeah, this is a strong big imbalance which was inversed by the price, and after we get the test, yeah, so as you can see, yeah, this area, this is imbalance, and it is imbalance before we got this imbalance over here. This won't be inversion because here is the middle of the candle. Yeah, we should inverse all this area, and after this we got the inversion fair value gap as well. So all this is inversed fair value gap. Yeah, market structure shifts, continuation after failure, high probability reversal entries. Okay, that's nice. Even on the low time frame, when we are looking, for example, at 5-minute charts and we want to open the long trends, yeah, long positions, we could see how the price going longs only after forming this type of models. So here is our short imbalance, which was tested by the price over here. Yeah, as you can see, this is candle number 4. So this is candle number 1, 2, 3. The price hit to this imbalance, go down, make some sort of manipulations. I don't know, maybe SMT with DXY, for example, because it's EURUSD. But after the price hit to this area over here and we got this imbalance, which is, as you can see, it's testing this side over here, this imbalance. Yeah, so as you can see, this is still our short imbalance, this one, which is inversed by this imbalance. So we could say that we are going longs from this area, because when the price hit this much amount and this much volume to the market, we are probably going long, and this is the change of the trend. Yeah, so let's go further. Yeah, so simple gap versus fair value gap. A normal gap is just a space between candles and often seen in stocks during session opens. Yeah, well, they've seen anywhere, and that's not only on the stocks, it's on all forex market, crypto, and anywhere you want. But in the opening of the kill zones of the timings, we'll talk about this in different video because this is an important topic, the timings. The price is not regulated only by the market, and this is also regulated by the timings, the London opening sessions, the New York opening, and the same on Nasdaq on any instrument you trade. So remember, FVGs are not random gaps, they represent inefficiency, and inefficiency in the market trends to get rebalance. So they always, not always like 100%, but 99% these fair value gaps are not liked by the market, and they should be rebalanced. What I mean by rebalance is the price usually give us the entry when they hit some sort of fair value gaps. For example, let's go on gold graph, yeah, and let's see how the price be moving here, yeah. For example, we go on the 30 minutes time frame, and now we will determine the imbalances on the 30 minutes time frames, so we can enter the position. So first of all, let's see how the price manipulates on these highs. Yeah, this is some high, yeah, high of the 26th of the February, 25th. And this is the manipulation on 25th on February, same day. Nice. Okay. So the price hit to this high. And after that, the price gave us imbalance number 1. Yeah. So this is FVG number 1. We'll bring it. Yeah. Number 1. And this is here, fair value gap number 2, which is inverse fair value gap. So we will say that this is IFVG because the price hit aggressively to this high, get this high, and after that bring us back and gave us the inversion of this fair value gap. And what we can see next is how the price manipulating with this candle exactly to this area of this fair value gap. And you can say that this was a fulfill, yeah, which stands for full, fulfilling of this area. So the price could fill fair value gap like 50% of it, yeah. As you can see, price didn't aim to fulfill all this fair value gap, yeah. Here, the price checked this fair value gap, but didn't take this even 0.5 points over here with this candle, yeah. But here is the price fulfilled this fair value gap and then go down. So this was our entry point. We could enter the position like that, even with the shorter stop loss, because we believe that this area, this is reversal area, and we would go shorts from this area to this lows, for example, yeah. So quite easy. Let's go next, yeah. So as you remember, yeah, as we spoke now. So regular fair value gap, this is standard imbalance created by the strong displacement, yeah. So strong displacement, which brings us to some new short narrative, yeah. Boom, displacement, test of this displacement, boom, one more displacement. So when the market goes short or long with a strong narrative, that's always bring us to the imbalances. IFVG, the inversion fair value gap. This is something that happens when the regular fair value gap gets violated with the price break through it. And here is the reverse of the market. And this is where the fair value gap appears. So this imbalance is perfectly inversed with another imbalance, and we can go longs from this point. It's perfectly to see the test of this area, and after that enter the longs, but whatever, the price could go straight without test, and you should be prepared for this. So the bullish FVG is always faced to get broken, become resistance, and a bearish fair value gap that fails to become support. So they works like a magnet zones for the price to be retraced and replaced and to be tested again. And also it works like a supply and demand zones and support zone, which will break the price through or push the price. For example, here, yeah, 2 examples, which I will show you. For example, let's go on Germany 40. We can see how the price on the 4 hours time frame waits for the price to be tested this fair value gap over here. Yeah, you can see this is the fair value gap, which was fulfilled. So fulfill of this imbalance is cool. That means that this area is almostly done for now, and we should go longs from this. So this imbalance was fulfilled, and the price fly through it, like same moment the price get through it and fly away. Yeah. So I actually was taking the longs. This help you to enter the positions, so you can easily enter the position after the price get to this imbalance. Why? Because you have opportunity to understand which zone will give you the reaction. You shouldn't wait for some sort of models, whoa, break of structure over here. Yeah, that's cool. But if you know that you're in long trend and this is the last area of 4 hours fair value gap, which can hold the price before it go into the all-time high, you should understand that you can go to the position straight from this point because it's the last area which can support the price. Let's go same from the short. For example, let's go weekly time frame over here or daily. And let's see how the price reacts on daily time frames. So here is the daily fair value gap over here. Yeah, it's huge and it was done on the all-time high. So this is the area which will give the reactions. First reaction here, after this here, after this here, and after this fulfill, as you can see, yeah, this is the high border of this fair value gap. After we fulfilled all this area with this candle, we got a strong short move where? To here or to here. To some zones that can push the price up and we can hold. So this is how it works on this market, yeah? As you can see, here is always some fair value gaps which also hold the price. And we can't say like 100% sure what was holding the price more, these fractals over here or this fair value gap. I believe both. So you can also synchronize all these instruments together, and you should know better that when the price tests your imbalances, it's always good and you always could enter the positions with this. So I think that's fair enough. Let's look also some sort of imbalances and how the price be moving. So for example, yeah, we see this is the downtrend imbalance. So wow, this is a strong imbalance that hold the price down, and we can go longs before we inverse it. Inverse not only with imbalance, but inverse with a move like this. And this is a perfectly example of what is IFVG is. So the price break down to these lows, leave us the imbalance. This is the imbalance number one. And after that, the price break up and gave us this imbalance over here. So this is inversed fair value gap, and we can point it like this. Yeah, this is the new area which we will call inversed fair value gap, which is strong point to go longs after we get the test of this area. So this is the inversed fair value gap, break of structure, test, and this is the entry point. Actually, I was entering this position as well. So this is, guys, happens so usually, and you can enter so much position with this area, and this is such a nice instrument that you can use, guys. So here is the inversion fair value gap 2, here is the inversion fair value gap, no, here is not. Let's go, they're everywhere basically. So here is, for example, this is inversion but not perfectly, so I won't give you this example. Yeah, I will look for something better in the short movement. And as you can see, you see how the price is going up. You don't see much of the perfectly inversed fair value gap to the short direction because the price is moving up, yeah? But you always can find some sort of, you know, some sort of inversed fair value gaps to the long direction. So let's find something about shorts. The short fair value gap will be here. So this is perfectly example of the short fair value gap. This is fair value gap to the longs. And this is fair value gap to the shorts. So this area, which place for both of them, is called inversed fair value gap. And what is bring us to? That's bring us to a huge downtrend with updating of these lows. And as you can see, this small area is can help you to get this type of the positions with higher air, with, I don't know, with the targets over here, this 3 risk reward ratio. So this is the perfect example of how you can enter this position and how you can wait and use this instrument. So identify strong displacement, yeah, down. For example, we identify strong displacement over here, mark the fair value gap. Okay, we mark the fair value gap over here, and we mark the second inversed fair value gap over here. Yeah, wait for the price to retrace into the market gap. We will wait for this. Look for the confirmation inside the fair value gap. Look lower time frame structure, shift or rejection. Super, no problem. So we can always find the models on the lowest or on the lower time frame, so we can see how the price be moving here. For example, in this area, this is the inverse fair value gap. Yeah, let's see one more time how it looks. So the perfect example will be here. Yeah. So for example, we see that this is, I think here is now some sort, here is the perfect example. Okay, great. So this is the inverse fair value gap 5 minutes. Boom, this is inverse fair value gap on 5 minutes time frame. We wait for the price to get through this imbalance, yeah, to break through it. And after this, we want to see some type of manipulations so we can enter the position, so, or retracement, yeah. So let's go on the 1 minute time frame. It's gonna be easy to find some manipulations over here and some positions. So let's see how the price retraces this fair value gap. And here is actually no retracement. As you can see, price holds up and we couldn't go lower to this fair value gap. So let's see some, some different examples of how we use this. Actually, the gold is going to the all-time high now, and that's perfect. Let's see how the price plays for us, for example, over here. Yeah. So this is the perfect example of how we can be using the fair value gaps and how are they perfectly gave us the manipulation and how they gave us the models to enter the positions. Yeah. So for example, here is, I want to find some good examples so you can enter the positions, Sam, as me, and actually they appears so often and they appear so usually that you can enter any positions you want. So let's see from here, for example, yeah. Here is the price. Show us the inverse fair value gap. Okay, this example. So we can say that the price hit these highs over here, yeah, we hit this imbalance, we hit this inversion imbalance, and this is the retracement. So when the price came back to this area with the tests, and after that gets the reaction, we could say that this is the inverse fair value gap that is resistance, and we are getting a strong reaction, and we can go shorts from this area. That looks for the longs, yeah, for example, over here, boom. This is the short imbalance, and this is the inversion without tests, because gold is usually going without tests, so it's hard to take the positions to enter with the test. But guys, you're usually don't wait for the test when you see the inversion fair value gap. You jump straight and you just know how the price be moving after that. Let's see the examples over here. For example, boom, 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 over here. Nice. So this is the short imbalance, which was inversed, yeah, with this movement. And this is also the long imbalance that was inversed. Boom. So this whole area will place as a strong support area. But when we break through it, we get this type of moves. So as you can see, the price holds before we hold in this fair value gap. But after we get through it, we get the strong moves and they always play down. So as you can see, this is the inversion fair value gap. This is the last fair value gap, long fair value gap, which was on this area, and the price stood in it for a long time. As you can see, the price was hitting this fair value gap for 1, 2, 3, 4, 5, 6, 7, 8 minutes straight and couldn't go no up, no down. But after we get down and didn't aim to go back to this area, here is when the price actually goes down. Actually, you can see the replacement here, yeah, the same imbalance, test, boom. Price couldn't close the candles here because it shows how weak the price is, and we go down. So there are many imbalances and many options how to use them. So if you want, you can also make a slightly more energetic version of fair value gaps, and we can speak about this on the live streams in our Discord server. So guys, thank you for watching and thank you for your time. See you.